is the 77 WABC minicast.
So let's take a look at this consumer price index and some other data points. And the stock market, too, I guess. Stock market had a very good run. But we'll do our stock market stuff at the top of the next hour. But let's look at the economy and its impact on people's pocketbooks. The CPI up big, as I said at the top of the show, but really it's mostly wartime energy-related prices. Actually, grocery prices, food at home, actually fell 0.2% in the month of March. Very interesting. And I'm seeing that goods prices, commodities, ex-food and energy, barely up in the last 3 months, in fact. Even the last 12 months. That was the tariff warning. Anyway, it's up only 1.2%. So I would say at this point it's an energy story, not really a broad-based inflation story. Let's hear what John Carney, Breitbart news editor for economics and finance and co-author of the Breitbart Business Digest, Daily Business Digest, and E.J. Antoni, economist and senior fellow at Unleash Prosperity and the chief economist at the Heritage Foundation. Gentlemen, welcome. John Carney, 80 prices fell. I love that. How many prices are in the whole index?
So there's about 230. This is 40% of the prices in the index fell. And this is not counting, there's categories and subcategories. So I try to take all of those out and only count. So we're not doing any double counting when we say things declined. And it's broadening. So remember, we first talked about this back in January, how it was about 35% of the index declined. That went up to 37% in February, and the March number is 40%. So the disinflation is broadening, which is a very good sign. It means that we're not seeing exactly what you just said. We're not seeing broad inflation in the economy. We're seeing growing disinflation. The inflation we got in March is almost entirely oil-based. It's gasoline. 3/4 of it was gasoline, and almost all of the rest of it is energy.
Yeah, I mean, looking, gasoline up 21% in March. It's a big number for 1 month. Energy overall up 11%. And the 12-month changes are not too dissimilar. The one I love the best is the gross food at home, a.k.a. groceries, actually fell 0.2%. Now, EJ, you worried. What were you telling me the other day on the TV show? We're going to have big inflation because spreading. I mean, fertilizer inflation's going up, sure, but that's a function of the wartime energy problem, is it not? That's not a money supply function.
Oh no, Larry, you're absolutely right, 100%. This is not a money supply story here, and in a lot of ways, it reminds me, I think of I would say 2020, right? Because initially the COVID pandemic was not a story of monetary inflation. Initially, it was a supply chain story, right? You had all these different shortages throughout literally the entire world and throughout global supply chains. But then on top of that, late in 2020 and then into 2021, even into 2022, we were throwing all of this fiscal and monetary so-called stimulus, right? We were throwing this gasoline onto the fire, and we turned a supply shock into an inflation shock, in my opinion. So I don't want to see that happen this go around, obviously, right? And one of the issues here is that because energy goes into so many different things, that this energy shock is going to bleed over into a lot of other sectors in the economy. Fertilizer has been a really big one. If you're a farmer and you see your fertilizer prices go up 40%, in some cases, you're just going to buy less, so your yields are going to be down in a few months, which means you're going to sell less product. You're bringing less to market. That puts upward pressure on prices. But even if you're buying the same amount of fertilizer, you're going to try to pass those costs on to the consumer at the end of the day, right? It's just another input cost like anything else. So yes, I think that if we get this war wrapped up really quick and we get the Strait of Hormuz open and we get energy flowing again, this is going to be a one-time shock and then prices will come back down. But I just don't want to I don't want to undersell this. In other words, tell people it's fine, everything's going to be okay, and it's only gasoline that's going to go up in price. Because I think we have really good reasons to believe this is going to cause a lot of knock-on effects here.
Well, the other thing, though, I would say, and I don't want to be too monetarist. I pay attention to those figures, money figures, but I don't want to be excessively monetarist. But I will say this. If you have a money supply lid, a money supply cap, that is going to cap the economy, nominal GDP, and you're not going to get the spillover effects. Some prices are going to have to fall if the national income is steady or if M2 is steady. Now, again, I don't think that's a pluperfect line of reasoning, but it is something. However, John Carney, I would suggest that right now at this moment, the Fed, in all of its Jay Powell, Lord knows what's doing, but the Fed should just hold its fire here. There's no point in jamming down interest rates, which might have the impact of raising money supply and other national income issues. I'd leave it alone. You know,
I think
if you can isolate it to energy, leave it alone, right? I mean, why should they move?
I think that's right. We had a very strong jobs report for March, so that's not a problem. We don't have to worry about that falling apart. The personal consumption expenditures were it grew quite nicely on a nominal basis. So I would not, and we don't want to repeat the mistake of turning this supply shock into a broader energy shock. What you said is exactly right. It is very hard for all of the prices to go up at once unless you start pumping more money into the system. If you start doing that, you then do risk this in turning the supply shock into a broader inflation shock. We don't want that to happen. And there's no problem that we need to instantly rush to address. So we can afford to hold back, let the supply shock, the gasoline shock, the Strait of Hormuz go into the past, and then we can see what's going on with whether or not we can lower interest rates. I wouldn't do it right now.
You know, the job number was very interesting, very strong, whatever it was, 186,000 private sector jobs. And EJ, I would say this would be a time, let your supply side policies, your fiscal policies, let them carry the ball for now. Let's not worry about money. You've got 100% depreciation, 100% expensing. You've got a lot of business CapEx were very strong in the durable goods report. You've got factories being built. Heck, construction was unbelievable in March. Up 26,000 jobs. That's a big number. Manufacturing jobs are up 15,000. It wasn't all health care and social assistance. Let your fiscal policy carry the ball. Lay off monetary policy for now, EJ.
Larry, that's exactly right. And I think that's part of what we're seeing here with some of the pro-work and pro-growth incentives, the supply side incentives that were part of the One Big Beautiful Bill passed last year, whether it was no tax on tips or no tax on overtime. Look, those are incredibly powerful pro-work incentives that encourage people, again, to be more productive, to work longer hours, to be more efficient. And so that's all really, really good news. And I think they would do well, the Congress and the president, I think they would do well to really double down on that with a second reconciliation package this year and try to get even more of those kinds of, again, pro-growth and pro-work incentives here that are going to help push out that supply side. In other words, push out the production possibility frontier of the economy.
That's the Kudlow plan. Steve Forbes calls it the Kudlow plan. But you know what? I think I'm losing. The noise from this meeting yesterday in the White House with John Barrasso, Senator Barrasso, and Lindsey Graham, it looks like they want a skinny bill, not a big bill. I want a big bill. I want DHS, TSA, I want all that stuff. But I want the Save America Act, voting rights to go in there. I want tax cuts to go in there at a minimum. Let's not pay capital gains on inflated gains. That's just an illusion. It's not real. Steve Forbes wants some lower marginal rates for the middle brackets. I'd be for that. In other words, and then you got a whole area of waste, fraud, and abuse that's could be $1 trillion as an offset to any of that stuff. In other words, I want to go big. These guys want to go small. I'm very disappointed.
Larry, we had to push them. Remember, we had to push them to do the one big beautiful bill last time. They wanted to not do it. They wanted to hold off till the fall, and we never would have gotten it done. Yeah. So look, Congress has to be pushed again. You're absolutely right. The good news is the tax cuts we did get are actually outweighing the drag on the economy from the higher energy prices. If we didn't have those tax cuts, we would be in very bad shape right now. That the tailwinds from that is much stronger than the headwinds from the higher gas prices.
Yeah. The energy story is the biggest increase in the CPI. Actually, I was just reading the Wall Street Journal editorial page, and they actually agree that it's mostly an energy problem. And the Fed should keep its powder dry, so that's good. And they'd like to see the Strait of Hormuz completely open. That's correct. I wouldn't give Iran any money at all, but that's what we talked about with General Keane. We're here with John Carney, who is the co-author of the daily Breitbart Business Digest, and E.J. Antoni, economist with Unleash Prosperity and the Heritage Foundation. So let's see. The Atlanta Fed, what is it, GDP now? That's the Atlanta Fed. They're looking at a very weak first quarter, I guess, just above 1%. John Carney, should I believe that, or is this all demand-driven? That's trouble. Their model, they overestimated Q4 pretty badly. Are they underestimating Q1?
Yes, for the very same reason. We had the big government shutdown in Q4. That threw off the Q4 numbers. That's coming back, a lot of that, in Q1. And so they overestimated Q4, underestimated it in Q1. It should be, I think, a full percentage point higher than what they have in what GDP Now's model is putting out.
That's it. EJ, that's an interesting point because in these GDP, you look at GDP models, I'm just looking at the straight numbers. The fourth quarter winds up being a very low number, 0.5%. Now, parts of that number, business investment, were quite strong. On the other hand, government spending was quite weak. So government spending subtracts from GDP. But I would say less government spending and a lot fewer government jobs. I mean, we're down almost 300,000 federal jobs since Trump took office. Why isn't lower government spending a good thing, and why isn't fewer federal jobs a good thing? I don't understand this. I thought, free market capitalism was the best path to prosperity, not big government socialism.
Well, not if you talk to a Keynesian, right, Larry? And look, this I think is part of a broader discussion here. You bring up a really, really great point, Larry, and I think we really just have to kind of start over in terms of how we measure, not just how we calculate the national accounts, but how we measure the economy broadly speaking. We don't accurately capture the value of gig work. Yeah. We don't accurately capture the value of people who work from home, whether they're working in a sole proprietorship or if they're a W-2 employee or a 1099, or even if they're a homemaker. We really don't value correctly, in my opinion, a whole host of different kinds of human labor that are increasingly becoming the norm. We still try to measure the economy the way we did over 100 years ago, when you had a disproportionate number of people still working on farms and in manufacturing, and the service sector was way, way smaller than it is today. So you really need to, I think, just broadly reevaluate all of those things. Now, to your point specifically, though, getting back to that real quick, you're absolutely right. One of the big things that artificially increased these different economic indicators under Biden was the government spending more money and hiring more people. And as we reverse that, it makes the headline numbers look worse than the underlying economic reality would actually lead you to believe. And so, yes, just because you cut government spending, that's not a bad thing. Just because the government lays off a bunch of workers, no, that's not a bad thing either. But it is going to make those headlines look worse.
Hey, John Carney, if you can count 80 price reductions, I'm counting on you to redo the GDP account, the entire account. John Maynard Keynes, out the window, too much emphasis on government spending. And all those post-war Keynesians that were ruling the roost. I mean, we really need a new model. I mean,
we absolutely can do this, Larry. We can do a private sector output measure that would incorporate the output of them, because AJ put this really well. We actually don't count homemaker output, and that is actually product. It is economic output. So we could do a private sector plus home GDP that would work very well and would actually tell us a lot more about the health of the economy than the current GDP measure.
Yeah, well, I want to reverse these government jobs and government spending. I mean, I think they have to reverse the sign. It's not a plus, it's a minus, and it's not a minus, it's a plus.
I think when we look at the jobs numbers for every month, we should add on rather than subtract the number of government jobs we eliminated. So when we say, we added 180,000 private sector jobs, what we should really do is say that's the equivalent of actually adding 200,000 jobs, because we also cut out another 15,000 government jobs.
Yeah, we also we should move profits. Profits are in the income accounts, but they're not in the GDP product accounts. Profits are the mother's milk of stocks and the lifeblood of the economy. Anyway, we got to get out of here. You guys are great. We're going to redo all the models. John Carney, Breitbart, EJ Antoni, Unleash Prosperity and Heritage. We'll take a break. On the other side, Robert O'Brien, National Security Advisor. Let's hear his take on Iran.
The Larry Kudlow Show on the Red Apple Podcast Network.